Welcome to readtheticker.com. Today we're going to talk about the indicators of volume types within the analysis chart. Just expanding on a bit more. Here we've got the weekly Apple chart. Blue bars are higher closes, the red bars are lower closes. We have the readtheticker.com site, the chart ID number, the RTT trend rank at 49, and the bid ask 1.91, which is the spread between the bid and ask of the closest option strike prices to that price there. That's a tight option spread. Okay, we first have volume indicator, which is a summation volume of the period above with a common 18 PA moving average with a 10, I think it's 20% margin of error around the average, so we can get an idea which type of volume is extreme, low, or average. Extreme is above the red band, low is below, and average is in the middle. The volume referred to as volume up down is like the standard, but it's coloured relative to whether the close is up or down. So red volume is when the close is down, blue volume is when the close is up. So here there's 3 red bars, and there's 3 red closes here with the same average. And here we have month net up-down volume. So this is the monthly volume bars. Summation of 4 weeks of weekly bars. This is a weekly chart, so this big red bar is a summation of 4 weeks. 1, 2, 3, that's 4, I think. So if you add up the net volume, you'll get 3 negative and 1 positive. And that's the summation. So you get an idea of the net volume for the month. You can do that for the week and half month as well. I just mentioned half month. Half month is the first of the month to the 16th, to the 15th, and then the 16th to the end of the month. It's just like a double week. So instead of, and here we have RTT high-low volume. This here is to show which volume is above average, which is the purple, which is volume which is average, which is the grey, and the volume which is low, which is the yellow. The whole idea is to recognise that the purple volume is where the specialists and market makers and the insiders are actually doing more activity, and the yellow bars are showing where they're not really interested and there's little insider activity going on, and the grey bars that show, you could probably say that's average activity. So the idea is if you're at Wyckoff or studying Richard Wyckoff or just you're looking more Richard Ney logic, you want to be able to explain what the purple bars are up to. Is it good buying, good selling, bad buying, bad selling? Is there short covering going on, short selling going on? Is it a climax, or is it a breakout from accumulation, breakdown from distribution, and so on? You want to know what the purple bars are doing. And to help you with that, we have our RTT volume indicator, which colours the extreme volume, which is above average volume, the dark colours. If it's up, it gets a blue bar. If it's down, it gets a red bar. And if it's average, it gets a lighter red, lighter colour, and it's below, it gets a much lighter colour. So this RTT volume helps you to determine what's going on with the extreme volume or above average volume on the chart with price. So here we have, I've explained, we have red family, which is a close low, blue family close high, yellow family low activity, grey family unknown. We don't have too many greys. Apply the law of effort versus results to a single bar or several bars. What's that basically means? I've just grabbed some here. We've got a big blue bar here. Lots of volume. So we've got lots of effort on this down spike here. The results, yeah, it's limited for that sort of volume. But we obviously get a low volume test there, so you would have been pretty excited for a bit of it, wondering what was going on here. So, because the relationship between price and volume is to be equal. If price goes up, slowly or generally, you want to have volume representing it. If you've got an up bar, but volume is extremely high, there's something else going on there. For example, if we can find one, here's one. We got an up bar, but it runs out of gas. Sorry, I'll just get that right. We got an up bar here, and the next bar runs out of gas because the gas is no interest, and eventually it becomes cell time. Narrow range, low interest, there's no selling pressure there. Here, no demand there because it's up on the upper end of the range. These are just little no demand bars because there's no activity, no divergence there. Okay. So the last one is RTT volume confirmed by close in new ground. So what we have here, for example, is we have these. For example, in this RTT volume is a mirror of the RTT volume above it. The only difference is that when we get a dark or extreme volume, a dark coloured bar, with these two red ones here. For example, this red one here. So this one here is dark red, and this one here is a lighter red. What that basically means is we had a down volume day, but it was not confirmed with a new low. There's no new lows in the 2 or 3 bars afterwards. So therefore, you have to confirm that as weak selling and probably mostly buying. So the bar in that particular case has been downgraded from a solid red to a light red. All right. So in an instance here, we got a light blue here and a dark blue up there. That's because we had some buying come in from the lows, pushed the close up, but we didn't get any new highs. So there's no confirmation. So yes, there was a bit of buying going up there, but not enough to make a change in the trend. So it's been downgraded from a dark blue to a light blue. And here we have another situation with a dark blue up here, because we're trying to work out what the extreme volume is. The reason why we're trying to work out what the extreme volume is doing, or above average volume, because that's where the specialist insiders and the professional man is exercising what they're up to. So we want to have a reason for that. Here we have a wide-ranging day finishing in the middle. So we tag that as a, it's up from the bottom, so it's a default to buying. But there's no close above that high, so it was being downgraded from a solid blue bar down to a light blue bar. So yes, there was demand there, but not demand to confirm that it was all buying. Okay. So in the end of the day, the reason why this stat's quite interesting, if I just change this to a monthly chart, because the higher you go up, more like better signals you get with the RTT volume confirmed. So here's the Apple chart with a monthly volume. I just want to show off the last two, so we don't need to. Where are we? Okay. So I'm using the volume indicators in the first section. I'm using the volume indicators in the lower section. That's why we can have so many charts. So I'll just turn these off. Don't need that. And we leave those on. We leave those on. That looks pretty good to me. So ideally you want to work out what the specialists are up to, the insiders. Are they short covering, short selling? How they mean demand? So we need to have an explanation to explain the big volume. Okay, now high-low volume, we see what the extreme volume is based on a monthly basis. We want to know what's going on there. You've got to have a story for that. Because when you're taking a position in a chart, over here, you've got to see if there's immediate weakness or strength, or is a weakness tapering off and supply and demand's overcome. So you've got to understand the story of the chart. For example, here we've got right, so here we have our standard RTT volume, right? But let's do this lot here. So we had a dark blue there, and it was downgraded to a light blue. That's because we had an up bar, a long bullish tail, but there's no new highs. So even though it was buying, but it was overcome by supply, so therefore it was downgraded. See, it's downgraded. So that basically means the last dark blue one was over here. So over here, the dark blue is dominated. And to the right, pretty much the reds are dominated. So that's obviously the trend. So, oh, well, hang on a second. We've got dark blue dominated there. That's right. What happened here? So, excuse me. Right, so it started the trend down. And here we have a situation where this dark red line here was downgraded to a light red line. So we have a big down bar here. But within 2 or 3 bars after that, there was no new lows. So within that big down bar, some buying pressure definitely came in. So it was downgraded, because otherwise, if it was true selling, it would have gone on much lower and a lot faster. So there was a bit of stopping going on there, a bit of slowing of the trend. So that big dark red bar was downgraded to a light red bar. Like I say, I understand you've got to take into account the law of effort versus results. Because the volume was so high at the left, we don't really get any blue ones, but we get some blue ones coming in here. As we can see, the trend starts to change. That's another good example. On an uptrend, what you want to see is where the dark blues on the confirmed chart hold the trend. Look at this one here. You've got a dark red one. It's in the consolidation of the Apple chart. See, this is the run up to the Apple. Very high volume, dark red. But as there was new lows, the dark red bar, there's a low close you see there. So there's some supply coming in, but the supply was overcome by demand. So the dark red bar was downgraded to light red because there's no confirmation. So in the sense between that point there and that point here, the data showing is that there, I'll scroll back up, as you can see there's no real challenges of supply to upset the trend. Now, the colour painting changes within three future bars. So that basically means that any 3 bars here can change. So it does repaint, so you have to wait. So you have to understand that if you get a dark blue one here, or what it comes in next, it could have its colour change 3 bars later, because we only know if demand or supply has overtaken it by the future bars. But the main point is, when we look at price on the right, we want to see where supply and demand dominated from the left, and we want to take into account where the strength and weakness was on the chart. We want to explain the extreme volume, like the purple ones, right? And we want to know what happened when there was low volume. So there's 2 things you have to work out. What's going on with extreme volume, and what's going on with low volume or dullness. So as you can see here, there's lower volume than normal. Some red, mostly red bars in there, obviously. We had a blue bar come in here, a solid blue one. This indicator RTT volume is based on close, without any regard to the future bars. A big tail there, but as there was no new close in the next 2 or 3 bars, taking out that high, it wasn't strong enough to stop the trend, so therefore it was downgraded to a light blue. And that is why we had another swing from here. This is why we had another swing down, because the supply that came in overcame this demand. Is that what? Yeah, overcame this demand. So it was a big to watch out for. So those are some of the volume indicators of readtheticker.com, just to help you out and learn how to understand them. Thanks for watching. A little appendix to our volume video. Here we have monthly GDX, and we're looking at the standard chart that I use to view the monthly data whenever I do a pop-up. And we can see here I have GDX with RTT steps. I have RTT volume confirmed. I have RTT high-low volume, and I have RTT volume, just the standard one. So what we see here, I want to be able to explain the extreme volume. I want to know what the insiders are up to. I want to get a feel for whether they're buying, whether they're short coloring, or they're short selling, or what's going on. But one thing which is very noticeable in the last for about a year was that this space here, we'll just go for there, shall we? All the red bars for that year, which are extreme, because the close is low and they're above average, well obviously extreme is way up here, have been downgraded to light red. Okay? Lighter red I should say. That's because when a down bar happened or the negative volume came in, no further lows were made on the monthly chart. Right? So this pressure, the selling pressure, was not just selling pressure. There was some demand pressure coming in here. All this volume has been absorbed. And when you have so many bars like that, that is real compression, like a spring being pushed up. And if that was, well, it's just plain very obvious. And then we had a blue bar come in here as an up bar, but there's no future higher closes, and that was downgraded. So it wasn't quite ready to go up, and as you can see on the RTD steps indicator, it was on the wrong side of the 60% retracement. So we get closer over here, we have a blue, where we have here? The blue bar here. And it's a tight, narrow spread, which means there was some lot of volume going in and stopping the downtrend, and then we get a higher close next up, so there's some real demand coming in there. And we get this strong down bar here, because the volume from the close is higher, so the close is lower from the high than this one low, so there's some selling pressure coming in there, but it was downgraded because there's no further closes below the low. So there just wasn't any selling pressure, because obviously there was more demand going on. The whole story was that this kettle was getting ready to burst. And as we know, for the last 6 months, gold stocks have been on fire. That's because of using the law of effort versus results, seeing the selling pressure come in, it's been absorbed because the demand pressure was stopping further lows on these big down days. And that's how you can, if you're using the correct volume indicators, to weigh up volume pressure and demand and supply pressure. Thanks for watching.